anymore. Mr. President, it's too much.
Donald Trump.
Donald Trump.
Donald Trump.
Donald Trump's.
Donald Trump's.
Donald Trump has announced a raft of tariffs on.
As Trump's tariffs.
Tariffs. Tariffs.
Tariffs.
Trigger a global trade war.
Definitely things is not looking good. Stock market is a leading indicator. US might go into recession.
US recession.
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 That recession. Recession.
People will, get out of SIPs. People will stop doing SIPs. So, things will go negative. Everybody talks negative. It converts into a trade war. Now, when Trump is taking all these actions, it will accelerate further.
A lot of wars. The trade war is there. The weapon war is there any which way. So he's opened a lot of wars at the same time. So basically, a businessman is playing a businessman's role.
You should be able to connect the dots well. So courage and the crisis and the cash. When you combine all these things, it will create a wonder for you.
Hello, hi, and welcome back to the channel. My name is Anupam Anand, and I hope you're doing well and good. Well, what's not good right now is Trump's new tariff plan. It's scaring everyone right now. And today I got an opportunity to talk to an expert about this. Darshan Patel happens to be a financial analyst and a business analyst too, and I will be talking to him about the current happenings in the world right now. From decoding market cycles to mentoring modern investors, Darshan Patel has spent over a decade turning financial insight into action. A former SEBI-registered advisor, CFA Institute member, and MBA in finance, Darshan has delivered 30% plus CAGR returns since 2017, while guiding startups and individuals towards making smarter financial decisions. Through his platform Life Nivesh and his new book Future Ready Investing, he simplifies investing for a fast-changing Indian economy. So today in this episode of Passion Evolution, I'll be talking to Darshan about his passion into financial world and about the market trends, of course, what is going on and what is happening, and about the future as well, what is going to happen. So Darshan will be talking about and giving about his insights on this topic. And yeah, before we start, please make sure to drop your likes and subscribe the channel. Alright, so finally we have Darshan Patel over here. Darshan is a very handsome looking financial analyst. So he will be helping you out not just with the money, he will be helping you out to bring a smile on your face. But right now in this scenario, no one is smiling, Darshan. Matlab, apart from you, you have a good portfolio, I guess, maybe. You're still smiling, you're happy about it. But maybe a lot of people are still scared. From last year point of view, when there was a peak in the market, and then the sudden drop after the second half of the year, there was, and recently the corrections again happened. While it was going up, corrections happened, again it went down, again Trump came, again it went up, and the stock market is again crashing. Yesterday itself, after the tariff launch, the celebrity word right now, tariff.
Absolutely.
I'm sure it was there from a long time. It is not a very new term, but in economics, it's a very old term. But why is it so much being talked right now, and why a sudden crash in the market? What is the scenario, Darshan? Please explain that to us now.
Before the election of 24, the Trump had announced so many things. So he promised people that he will reduce the taxes, especially personal taxes as well as corporate taxes. So there was a famous slogan that he used to talk about. He had always talked about, even in the first term as well, that make America great again and make America wealthy again. Right. So on that particular note, he started all this. So if we understand why they are doing what they are doing it, then first thing comes to our mind is for US right now, the major thing which is going on is very high national debt. So Trump is trying to reduce the national debt, and he's always been talking about this thing.
Recently, they figured out that they don't have gold reserves. It's a huge gold reserve is missing for them. And yeah, you're talking about the debt. So that is why to build their nation again. That's why they are doing this on a very hyper scale.
What the rationale is, US has lost so many manufacturing jobs and so many factories since 1997. Okay. So US officials were telling that they have lost around 90,000 factories and 6.6 million jobs since 1997. So they are thinking that because other nations are putting heavy tariffs on them and being unfair to the US, US is kind of losing in terms of manufacturing on all those things, because if you see China is manufacturing heavily and exporting to various nations, including
Manufacturing
India.
everything, in fact, China, from a nail cutter to a bomb, whatever it is, everything they make.
Exactly. And also, Trump wanted, in terms of national securities, Trump wanted to, negotiate with the countries. So he found that, tariff might be the best way to, negotiate with the different countries. So he negotiated with the Canada as well as Mexico. If you have heard about the, drug that is being exported to the USA, and Trump believed that, Canada and Mexico is not doing much with regards to that particular thing. So he thought that let's put the tariff and let try to bring them on the table and try to negotiate.
Okay, let's go back a little bit and try to decode the word tariff itself, like for the layman, for the humans who might not be aware about it, but they don't realize that everything is connected and it is going to affect every single human being by any means. So let's explain the word tariff in a better way, or simple terms, and how these numbers shown by Trump, how does it matter to every nation and to us?
So tariff is nothing but a rate that any particular country levy on this other country. So whatever the goods that are coming from outside to your country, so you put a particular tax. People generally call it import tariff or simply a tariff, right? The way US has calculated tariff is also kind of perplexing and complex things, which even other countries, when US and Trump announced on the 2nd April, some people couldn't kind of fathom it, like how did they come up with it. For example, he had mentioned in the particular board that India is levying 52% tariff on USA, right? On the other hand, in reality, India is only weighted average imposing 12% of tariff on the USA.
Okay.
But so the way they have calculated, tariff is also very funny. I found it very funny because they have calculated using the trade deficit.
Okay.
So for example, if India is exporting the USA around 87 billion or something of goods, and USA on the other hand exporting the India around 47 something billions of goods. So there is a trade deficit that you are exporting us more, and we are not exporting that much to you. That's where the word trade deficit comes, right? So the way he has calculated is trade deficit divided by the total import. By that calculation, it turned out as a 52% for the India. And then he said that I'm being generous and I'll only levy 26%. That is half of what you are levying. Actually, India is levying only 12% to the USA and not the 52%.
You're saying that the 52%, the 50% of the tariff, what he's claiming, Trump is claiming that we are charging them 50% on everything. That is not true. That is wrong.
Yeah, that is not true, because he has calculated by taking the trade deficit into account. So by any means he wants to reduce and zero down the trade deficit.
Okay.
So he saw the different countries, what are the different countries he's dealing with, and whatever trade deficit the USA had with that particular country, he had imposed a tariff. And if not, then 10% will be the basic tariff that will be imposed. For example, USA is exporting more than they are importing from that particular country. Even then, they will get 10% basic tariff.
So basically, a businessman is playing a businessman's role.
Exactly.
I mean, so and either in a clear open that I am here to do business. I mean. I mean, he has been clearly saying that, of course, since day one. I mean, even if it is in the terms of weapons, nowadays, like every country, he's selling out the weapons, and he's actually kind of forcing them to, please buy our weapons, otherwise the tariffs are there. So it's like either you feel secured with USA in terms of weapons, in terms of money, in terms of tariffs, otherwise you're nowhere. So basically, it has opened the front of a lot of wars. The trade war is there, the weapon war is there, any which way. So he's opened a lot of wars at the same time.
True. Because why US is able to do all these things, because US comprises 25% of world's GDP, 1/4 basically. Okay. So other countries which are 200 something countries, they won't be able to do much without USA. So they are exporting a few things heavily to the USA, and US being a consumer economy and having a super rich economy, Trump knows that they will have to come back to us and negotiate. Otherwise, for example, if small country do all these things, nobody will give a damn.
Correct.
If, for example, even if India will do all these things, nobody will give a damn. US, China won't give a damn, right?
Okay. So that's why
that's
maybe India is taking the diplomacy path, and we are doing the trades. We are talking about trades. Even China, we are talking about trades with China right now. China suddenly opened up and okay, we are ready to go ahead with. So this, what you're talking about is that a big nation is trying to use trade as a weapon to earn more money out of these small countries. So there is a trade, any which way there was a trade gap in a lot of countries. So why isn't the trade gap always like this a bad thing or a good thing? Like how does it work, the trade gap?
What I believe is trade is not always a bad. Even trade deficit is always not bad. And this is how world works. So for example, one particular country is having a good agricultural thing because they have good monsoon, they have good climate, and they have all the resources. Their land is fertile and everything. So for example, if one country is able to produce a coffee so well that there is no condition in your country that you will be able to produce that particular coffee sugar or something like that, right? So you'll have to import all these things, and it's not wrong, because if you want to consume the coffee, if you want your population to consume coffee at reasonable rate, then you will import. And for example, if that country is very small and they are exporting heavily a coffee to you, and in the return they are not getting any goods from your side, then it will definitely create a trade deficit. And that is very natural. And I don't think that, they are bullying you. They are just helping you with that particular commodity or particular product or technology, whatever it is. So I think, Trump imposing tariff on all the nations where they found the deficit, which I also find it unnatural. Because generally when someone put the tariffs on the other country, they put on the specific segment or the sector where they feel that they are being bullied or they are being abused.
Like for example, in the car section, wherein they're saying that okay, these cars manufactured from China is too much now, so that's why we'll impose the tariff. That makes sounds good enough. But other countries, they have a huge trade gap any which way. So now they're kind of exploiting the other countries or the small countries on these terms now, trade gap or trade tariffs now.
Okay, so US being a Google, Microsoft, so many monopolistic companies are there, right? And they are spreading their services throughout the world, and it's a kind of monopolistic technology,
right?
And there is no other competition. Maybe China is doing a bit, but there is no ultimate competition. So they are exporting the services heavily to other nations, and we as an Indian, we are consuming a lot of services from US. But USA, they didn't consider the service part in the deficit.
Oh, okay.
So in this particular modern era, the services, IT services, and all those services, digitization, whatever you call it, this will have a good proportion in the entire trade, and you can't just ignore it. But they have ignored it. They have calculated the tariff on the basis of just goods, which can be manufactured.
And I don't think they have misplaced it or they've forgotten. This must be a plan, of course. They want the resources, resources, of course. And they've also excluded the minerals. They've excluded pharmaceutical also. Just what they need.
So the thing is, they have excluded as of now. So yesterday only Trump said that we will also impose. We are thinking of imposing the tariff on medicines and pharmaceuticals as well, and it would be a rate which have been never seen before. So he has said that, that's why
so we can expect some medical bills also getting inflated, medical drugs also getting inflated in coming time.
Yes, so the implications would be very dire. I mean,
no, we will go to the implications in some time, but we will stick to the pharmaceutical. You were saying that pharmaceutical also. He said that it might go up, but the resources, the minerals, he's behind. I mean, he's not putting any tariffs on the minerals.
So he knows that what is the critical for the US. He knows that if we want import all these things, then it would be very difficult for us.
Then they need the technological advancement.
Exactly. So
of course.
So he has excluded few things like copper. He has excluded the pharmaceuticals. Though he is telling that we will levy the tariff on pharmaceutical as well, but that would be a separate thing. But I think if they levy the pharmaceuticals tariff, then the medicine cost, which is already high in the USA, healthcare cost is already high, and this will create even hyperinflation in the healthcare segment of the USA, because and the thing is they are unable to compete with India and China in terms of pharmaceuticals, especially with India. If you say, for example, one particular normal tablet which cost us 10 rupees to manufacture in here, it might cost 120 rupees to manufacture in USA.
True.
It's that different. So it's like 5x, 10x, 12x. That is the difference that we are looking at.
Correct.
And so even if they impose 50-60% tariff as well, they won't be able to give a benefit to the US companies.
True. So I mean, now coming to the main point, this already have introduced the scary word into recession. Are we heading into it? Are we going to see a huge recession in the coming year, or there are experts who are supporting Trump saying that no. I mean, Trump's thing are very on point, and what he's doing is for the future. After 6 months or a year, you will see a difference. Many things will be better. What is it? Are we going to see a recession period or a booming period?
So definitely things is not looking good. I mean, the way he's putting a tariff, and the tariffs are the rates are not low.
Okay.
They are in fact a historical high. Even during 1930s, they had did the same thing.
Okay.
So there was a Great Depression, which we call it, that happened in 1929.
Right.
And after the Great Depression, in order to protect the agricultural people as well as the industrialists, US imposed a tariff on so many nations at that point as well, and that didn't go well at all.
And that's why I tell people read the history, because history keeps repeating itself every 100 years, specifically more.
So history may not repeat, but it often rhymes, as we say that. And that's when if we take that particular reference in here, and in that particular comparison, the tariff is way higher as of today.
I mean, but the GDP but as compared to the money that time, money at this period is also high, I guess, maybe.
No, we are talking in terms of percentage only.
Okay.
Yeah.
Okay.
So,
I mean, as compared to that
particular context,
the 100 years back, what we had is doubled or tripled. I mean, more than that now. What he has put the tariffs.
Yes.
Oh, okay.
In terms of percentage as well. So the thing is, I think situation will go dire, and things won't be looking good, and stock market is a leading indicator.
Correct.
So when Trump announced the tariff and all those things, the next 2 days for the Dow Jones and Nasdaq, they fell 10-11%.
All the big shots have fallen.
Yes.
Yesterday itself. We are shooting this on 5th of April, and 4th of April, and it was a mayhem. Like 3rd of April, 4th of April was a mayhem.
So stock has already shown his indication that things won't look good down the line. Okay, and that's one thing. Another thing is so many investment bankers, so many big brokerage houses, they have increased the possibility of recession especially for the USA. So right now they are saying there is a chance of 30 to 50% that US might go into recession for next 6 months or 1 year or 2 years. So when we say recession, like how do we define the recession? When particular country's GDP goes in a negative growth for 2 consecutive quarters, we call it a recession.
And since lockdown, they have been into wars and low GDP and low growth any which way. So we can expect this as a more than 50% chance also.
Yes. So I think they are still wait and watch mode. The analyst and brokerage houses and everyone, because they are still figuring out what is going on. I mean, even other countries are still figuring out what is going on, what he has done, right? Because it is too big to digest. And I think whatever the tariff has been done, I think other countries will retaliate. So other countries
they are saying that if you do it, we are also going to
do it. Yes.
They are saying that we will also contribute to your inflation. I mean, it will be an inflation era. It will be a recession era. We are going to help you with that. I don't know why.
Yes. So even though other countries do not impose any tariff,
Right.
the situation will look worse in US, because what happens is, I take it a simple way. If you put a tariff on that particular country, so the goods and services coming from that particular country will become expensive,
Right.
Because they will just pass on. For example, if you are selling a particular drug at a 10 rupees, right? And if they impose a tariff of 20% even, so that 10 rupee becomes 14 rupees or something like that, 12 rupees, something like that, right?
So definitely the prices are going to rise for America.
So our players will
and eventually for everyone.
So our players will simply pass on the price rise to the end consumer. So ultimately, who will pay? US population will pay.
And
right?
we will also pay eventually. I mean, because if the
may
big bully or if the big boss of the whole world is
Right.
in the misery, what you're saying, they are into recession period, they are not showing growth. If the boss of the whole world is suffering, then I think all the punies will also suffer, all the countries.
Absolutely. So there is a saying that when US sneezes, the world catches cold. because as I said earlier, US comprises 25% of entire world GDP.
Correct.
So if something happens in the USA and nothing happens to us, then won't happen.
Correct.
But yes, the way things evolves out may be different here, because India is kind of an inward-looking economy, and we may have few of the demographic dividend and such things. We may have few things at our good side that may turn out positive.
Okay, you mentioned in your book as well the demography, how demography. You've written a book and you have mentioned about that, and how demography makes sure that the economy of a country or any sector grows. How do you say that?
Yeah, so when we say demography, so in that particular demography thing, we include the population, the current population, how much population you have, and at what rate the population is growing, and that depends on the fertility rate and replacement rate, which we call it simply birth rate or something like that.
And India is on top of that, of course.
So if I talk about the Japan and all these countries, so their fertility rate is way below than replacement rate. So generally a replacement rate is around 2.1%, right? So fertility rate should be 2.1% or even higher in order to ensure that population remains stable.
Okay.
We are at the 2 or the 2.1 right now.
Okay.
India. So India having a great population base already, and another major thing is average age.
Right.
How young population you have in your country. So, for example, if you take Japan, their average age is 48, 49.
Okay, yeah.
For China, it's 39. For US, it's 39.
Correct.
For India, it's 28 or 29.
Right.
So India is relatively younger. India is having a great population base, right? So being a large-scale economy, and we are growing at around 6-7%,
right, as
of now, right? So if all these things happens and if it affect us, maybe we might go to 5% or 4.5% for 1 or 2 or 3 quarters.
Right.
It is quite possible. But then there won't be a scenario or a situation where we go in negative. So the chances of recession is quite low in India, but you can never say with the surety.
Okay, but it will affect.
But this is how. So the demography, this is how it works. So in the very long run, 10 years, 15, 20 years down the line. So the countries which are already aged, right? The consumption pattern will be very different in that particular country.
Right.
So they won't be buying so much of makeups or lipsticks or all those things. They'll be buying a healthcare. They'll be buying a leisure. They'll be buying a travel tourism or something like that. And
consumption will be less in those countries. Anyway.
Yes. So in my book, why I have mentioned is when you see the future trends, when you see what sort of emerging scenarios will be happening, and how to adjust and allocate your money and fund into the stocks. So you need to find out the sunrise sectors. You need to find out, keeping all these things in mind, keeping all this demography. Demography will be a very fundamental base that you look at, and then over it you look at all the other things like how skillful the population is, how's the infrastructure, and how manufacturing and service sector is panning out, and how is the politics, how's the leadership, and all those things, and how the country is going overall.
This is one reason I got you on the podcast, because you are kind of giving very logical reasoning, very, very clear logical reasoning to the common man that, yeah, apply the logic and see the future. You can predict the future. And that's what I think Modi ji also did the same thing. Like when he came in 2014, when he started talking about Bharat mein banao, make in India, make in India, make in India, he was kind of signaling that at this era, at this point of time, that there will be a certain scenario wherein you have to look inwards and you have to produce your own goods and manufacture your own goods, because there will be a tariff war, there will be a trade war. No one knew about it, but now it's happening. So there are predictions which actually come true. There are signals which we are already given by the government and the media houses, but maybe we don't. We are not aware of it. So how you have mentioned in your book as well that demography will change, and for India it's a good thing. So we might get hit by this recession right now, but you are saying that we have a better future as compared to the other countries. I mean,
Yes, so if you are a very long-term investor, right, and if you don't care about 1 or 2 or 3 years of disruption or all these things, then this is the right time that you should start analyzing and position yourself for the futuristic scenario. Like for example, renewable energy changes, the EV comings, and so a lot of changes in the healthcare, precision medicine, and a lot of scenarios will happen in the future. And AI as well, of course. So AI will also disrupt so many industries and sectors, right? So if you position yourself keeping all these things in mind, ignoring all these short-term noises and everything, right, then you'll be able to do very well, especially when things are very fearful. And so I think that this is the right time to read books, analyze things.
I'm glad that before this podcast, the interview, and I did a very spiritual interview or a very motivational interview before this, and the guy himself, he was saying that there will be a beautiful time for people who really want to grow. If they want to do the hard work, it is the good time. And
disruption is the time where you need to be more vigilant, and try to see what's going on. Try to connect the dots and try to see where the sectors are weak, where the disruption is happening, which one is more weak, right, and which one is resilient and won't be much impacted, right? And there is a term called anti-fragile, right? The more you put a hard pressure on that particular thing, the more it becomes anti-fragile, and more it evolves and grow further down the line. So there might be some sectors at this particular point at which they become very anti-fragile, and then they not just survive but they thrive, and things will go normal maybe after a certain set of disruptions, and that's where at a particular point you may be able to build a good wealth, because you made a courage. So courage and the crisis and the cash, when you combine all these things, it will create a wonder for you. Specifically for the India, if I talk about when US is imposing a tariff to all the nations,
right,
then if US is imposing tariff on just India, then India might be at the vulnerable stage. But when the US is imposing heavy tariff on China as well as on Vietnam, Bangladesh, so many. So for example, if you take an example, this is not a recommendation. If we take an example of textile, right? So Vietnam and Bangladesh are very heavy exporter of the textile. But if US impose heavy tariff on Bangladesh and Vietnam, that they have already imposed a tariff.
They have done it.
So comparatively, our tariff is lower.
Right.
So our textile in USA becomes more competitive as compared to Bangladesh and Vietnam.
So there is a scope of growth.
Yes. So there will be blessing in disguise in many sectors.
I think this is a kind of a blessing. Even if we are not dealing with USA, that's what Modi is trying to do, going to Thailand, Sri Lanka, and every nation around, even to China. And this trade war created by Trump has been making other countries talk to each other. That bro, leave the things beside. Don't do any chaos right now. Let's just trade, because we have to skip this tariff war. So it is creating a lot of opportunity for a lot of players.
Yes, so I think India and Indian government should consider this as an opportunity, and this opportunity doesn't come often. It comes once in a lifetime, And when it comes, he'll have to grab it, he'll have to work on it. And if for example, if we find out that okay, there is an opportunity in manufacturing of this electronic goods or the textile, let's give the PLIs, let's create the big parks, and let's invite the players to invest heavily, and let's manufacture and let's export.
Correct. That's what a lot of players did 100 years back. Japan did, wherein they grew. During the war era, they grew. I mean, they utilized that opportunity and they grew so much. So now we have the opportunity in India right now, so that we can fulfill the 2050, 2047 dream, 100-year dream. So what would you
say? And what happened with the China is when China started growing, right? And because of not having democracy and having a leeway to take decisions very quickly, and that particular era, the globalization was happening. So again, let me tell you one thing is globalization, which we talk about today, is also very cyclical, and there's a very long cycle of 40-50 years of the globalization.
Okay.
So in 1975 we started the globalization, and it happened till 2008.
Okay.
And after 2008, the crisis when happened, we already started deglobalizing.
Okay, right.
We are not realizing it yet, but if we talk about the stats, which is called trade as a percentage of world GDP, how much trade is happening in entire world versus the world GDP. If you take that particular statistics, then we are already deglobalization is happening already, and now when the Trump is taking all these actions, it will accelerate further. So it was happening at slower pace, but now it will accelerate at very high pace.
So the business.
So I think down the line, countries might be inward looking. So they may not be.
This man is actually helping other businesses to grow also. If we see the scenario, a business plan is actually telling people to do business. Guys, do business so that you can grow. We can take it in that way. Otherwise, he's trying to
force everyone to do business with him.
But maybe it's the wrong time with America.
So ultimately, what happens in this scenario is, it converts into a trade war. When you impose, the other countries will also impose on you.
Correct.
So in the trade war, there is a saying that nobody wins.
Yeah.
The countries which are taking active part, they learn the old hard lessons of economy.
Correct.
And Adam Smith has also mentioned, the famous economist, he has also mentioned in his book that you can't always create and produce everything in your own country.
True.
You have to rely on the other countries, because there is something called specialization, and every country is specialized in something.
True.
Right. So you can't do everything.
Specialization brings to me and to the question now the era of Indian growth will be happening. Indian markets are growing. Definitely, ups and downs will always be there. You are helping as a specialized person to a lot of people by giving your knowledge and insights to about the market. How has your journey been from last 10-15 years? You have been into this, and you're training a lot of people, giving knowledge to a lot of people about the market. How dangerous it is, how risky it is, but if you have the right knowledge, if you have the right observation skills, you can go ahead about it. And you have written a book as well on that. How has been this journey? Talk about that. Keep everything aside.
Sure. So my story is a bit interesting because I have done my graduation in B Pharma.
Okay.
So being a science student, and being in pharmacy, I didn't know anything about all these things.
Okay.
I didn't know what Sensex is. I didn't know what Nifty is. Nothing at all. But during the second or third year, I got bored with the B Pharma and everything. So I felt.
You're talking about this, which year?
Sorry, I'm talking about 2010-11.
Okay.
Yeah.
After the recession period.
Sorry.
After the recession period.
Yes, after the recession period. So even during the recession period, I used to read newspapers and magazines, and I was trying to understand all these things, because these things made me bit kind of fascinated about stuff, that what's going on in the world, right? I want to know, I want to understand. I don't want to go in a lab and mix the chemicals and do all these things, but I want to understand the world. So at the third year of the B Pharma, I decided that I don't want to pursue ahead, in terms of M Pharma or anything. I just want to do, MBA.
Okay.
And And that was the decision. So after taking a decision of MBA, I had no clue that whether to specialize in finance or marketing or anything. But because of the environment, because of the social media as well, social media played a major role, because I was involved with the one group of Facebook called International Society of Value Investing.
Okay.
They used to talk a lot about Warren Buffett, the value investing, how he invests and how he made a fortune out of all these things. So all these things made me so much fascinated that I'm like, let's do the finance. Okay. And I learned the finance gradually, and I used to read a lot about the investment and all. So since my MBA only, I was pretty much curious about investments. So one thing that I had decided at a particular point is going down the line, I'll become an investor. I will invest in businesses, or I'll do something which is around that particular thing, business analysis and all these things.
Yeah,
so whatever I have done.
This is another big reason I got you on the podcast, because I would go for a person who's passionate about things. I also happen to be a civil engineer, but passionately I'm an anchor. I got here by passion, by learning it myself. You didn't learn from anyone, but you learned from your own mistakes. You learned from your own learnings, and even social media helped in a very good way. And when you mentioned that Facebook groups helped you, I remember there was certainly an era before 2015,
exactly,
we were getting the right knowledge at the right place in social media.
Now we are lost. Had Instagram. We had only Facebook.
Now the kids are totally lost. They don't know where to go for the right knowledge. So Darshan Patel, you have written a book. Please talk a little bit about your book. What it tells anyone, and how can people reach out to you, and why should people reach out to? I've already mentioned, but people, if you want to make good money, if you want to keep your money secure, you can reach out to Darshan, and you can buy his book also from Amazon. He has written a lovely book, and my brother is reading that. So tell me about the book, what you've written a little bit, Darshan.
Sure. So title of the book is Future Ready Investing. So basically, it will help you become a future ready. So subtitle is Identifying and Mastering Emerging Sectoral Trends for Wealth Creation in India. So the book will, it has talked about emerging sectors in India for 5, 10 or 15 years down the line. So what will happen down the line? How things will evolve, how sectors will evolve, what will be the sunrise sectors. No doubt, not all sectors will evolve and create a wealth for you. There will be a risk associated with all these things. So I have also mentioned the risk behind all these things as well. So I could identify 14 macro trends, and underlying 14 macro trends, I have identified around 99 or 100 micro trends within that.
Right.
So there will be a lot of micro trends for you to learn, to understand what will be the growth drivers, what will be the risk. And apart from that, I have also mentioned a lot of things about how you can actually be a visionary, and how you can actually, connect the dots and imagine the future.
Correct.
And try to understand what might happen down the line. So it's all about art and psychology as well, right?
Psychology. Psychology.
Yeah. So I have also mentioned a practical approach in the book, that how one can step by step understand how to be a visionary, and how to understand the emerging sectors and how to play. Because knowing thing that sector might emerge is one thing, and playing it wisely so that you don't lose money and you gain out of it maximally is another thing. So for example, everybody knows EV will come, but not everybody will be able to make money out of EV that easily, because ultimately automobile is cyclical, right? It has its own ups and downs and everything.
Of course.
And EV being not having a lot of charging infra and a lot of things, EV is not gaining a speed that it used to. It should be, right?
Yeah.
So the thing is, there are a lot of other factors as well that you need to consider while playing all these trends. So I've mentioned all these things as well, that how you can practically, gain the knowledge and play it wisely.
I've come across a lot of people who I can call them half doctors. They have the half knowledge, and they give out proudly their knowledge that, okay, this is my claim and this is where you should put your money. So that's why I recommend people to learn by themselves. And stock market or any market as such wherein you want to make money, you need to have the knowledge of everything. Why?
Absolutely.
The way you said art, psychology, the trends, the uptrends, the downtrends, everything matters. So the market knowledge, or anywhere you're putting your money, you should have the knowledge of everything. That is where the rich are rich. They have the knowledge of everything, and that is what I think you have also mentioned in your book. You have put across your knowledge that you should be knowledgeable about everything.
You should be able to connect the dots well. So
Correct.
whatever you are trying to learn, you should first, understand that what might affect this particular thing.
Of course.
And when you understand that particular ecosystem, then you need to understand, okay, at what rate this might, affect it. So then you need to create a mental models. So there is a special chapter in my book about the mental models of trend investing.
Right.
So that's where I have mentioned so many mental models of that, how you can connect the dots and how you can play, these particular futuristic trends, so that you don't lose much and you gain handsomely.
I have been only investing since last 1.5 years after the Paytm thing happened. I had no interest in this. Totally, like when you said that I had no interest, no knowledge about Sensex, Nifty, what it is, and all. Even I had no interest. Maybe I was 31-year-old. I'm 33 now, so I started 1.5 years ago, and I had no interest in it. But when I started watching news, and I got to know about the Paytm, that is when I thought maybe this is the right time I should be also putting on money, and maybe I'm in a small negative loss in my portfolio, but I've been learning from my own mistakes and I've been understanding, because the news helps me to connect. That's why you're saying that connecting the dots matters a lot. I have been observing that on the first of every month, the market goes up. On the middle of the months, it actually stays down a little bit, very subtle. And after the 25th, it starts going up. These are simple observations. I mean, these are things which anyone can learn. But I think there is a lot of knowledge to learn.
So there are a lot of methods by which you can play the stock market and investing. So when we say stock market, I don't consider myself a stock market analyst or something. I consider myself business analyst.
Correct.
So I focus on the business, I focus on the fundamentals, and I don't do trading much. And since beginning, whatever I have heard from the veteran investors, they have always advised that please stay away from the trading and all those things.
You may be the first specialist or expert who's saying this on a live, like openly who's saying this.
Because the thing is, there might be certain people who are very good at trading.
Correct.
They might be doing wonder at that particular in that particular methodology, but you need to understand yourself.
Correct.
First, that where you are good at.
Correct.
So, for example, when I understood myself, I tried trading for a few times and I failed miserably. So, and that particular point, I decided that this is not for me. I'm rather do the fundamental analysis and do the investing for the medium to long term. I'll never trade. So, first thing is you need to understand yourself.
True. The hats off to you that you're being honest about everything. And this is very true, that you need to understand if you are able to take the risk, or if you are able to, ready for any kind of risk in the market or not. Even if you are putting in a mutual fund or stock market eventually. Yesterday itself, 3rd of April, 4th of April, a lot of big shots are failing. So it must have been scary for them, a lot of scary things for them. So yeah.
Yes, so things will go scary, and there will be a lot of news around you.
Correct.
And some people will also advise mutual fund guys as well, stop SIP, don't do this and everything. So earlier, 6 months before, everybody was gung ho about SIP. They'll be like, we will make 20%, 25% CAGR and we'll be fine with our life, and we will buy a car or house down the line and everything. We'll create very big crores of portfolios and something like that. And now, things will go negative. Everybody talk negative. And people will, get out of SIPs. People will stop doing SIPs, and they'll stop even, believing in the Indian story. They will be like, "Ye kuch nahi tha, sirf hawa thi." And so things happen. And every time I've seen 2-3 bear cycles as well. So, and then during the COVID as well. So the way people were talking as if there is no tomorrow.
rather everything is cyclic and it keeps on repeating.
Exactly. Rather, on the contrary, I'm writing a lot. So I wrote a quote on the 21st March. So and the 23rd March we just bottomed out, and after that we have gone upway only for 5 years, right? So on the 21st March I written a quote saying that people might be talking so much negative, and there might be instances where business stay shut for 5-6 months as well. But that doesn't mean that good businesses will go out of businesses. They will stay and they will thrive.
We are humans, we will thrive out of everything and everything.
Absolutely. And then the kind of prices that I was getting at particular point was so cheap. And so
you made your portfolio strong there itself, in the lockdown especially.
Absolutely.
Nice. So nice to hear good things from you and the honest things from you as well. And we will do another interview as well, a podcast wherein we can talk more about India's growth after 15-20 days when the tariffs hit in and they placed fine. For now, this conversation is good enough to maybe understand what is going to happen. You have given hopes, telling people that don't be worried. Things might fall in place after some time. So let's connect again after some time.
Things may go very negative as well.
Right.
And this is the scenario where it separates patient people from impatient people, right? So impatients will do whatever screen is showing them, whatever people are talking around them, and they will take hefty decisions. So it's all about resilience.
True. Thank you so much for this whole talk and session. It was very much helpful, and I hope people will also understand. If they have any questions, I'm sure they can reach out to you. We will connect. We'll put all your links in the description below. And thank you so much for giving honest inputs. I mean, this is more important nowadays. On social media, we need honest opinions, even if it is about market or anything. Everyone has made money, everyone has lost money, but the learning is important, and that's what you shared your time. Thank you so much for that. And
thank you so much, Anupam, for having me. And I always love discussing all these things. It's always remained my passion. And the book and whatever blogs that I write on an everyday basis, this is all coming out of passion. And this is what I'm doing full time.
Thank you so much. And I'll not let you go. Very soon I'll catch you again and again. And very nice talking to you. And I'll put another good show for the audience, another session wherein they can have some more knowledge from you. Thank you so much for this time. We'll see you again.
Thank you, Anupam. Thank you. Bye.
I hope you understood the conversation and you enjoyed a lot of it. Please make sure to share the conversation, the interview, and please make sure to drop your comments and your opinions about this topic. What do you think will happen and what your opinions are? Please make sure to subscribe the channel if you haven't yet. See you in the next one. Thank you.